Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, March 10th. Today's non-farm payroll numbers that come out today, 8:30 Eastern here in the United States. So it's going to be really interesting to see what's developing. And we also have interest rate decisions, and we have the debt ceiling next week. So we have three risk events that's going to definitely move the markets, which we really desperately need because of the fact that we did have a pullback, but the pullback was very, very light on volume. And we gapped down and pretty much stayed there until buyers or dips came in, and started to rally the market. So that's been consistent since that last Wednesday's high after Donald Trump's speech. So it's going to be really interesting to see if we start a fourth wave, that fourth minor that I'm looking for within the big five. Our last fifth wave concluding this bull market run hasn't happened yet, but we'll see. I think either way, the song's going to stay the same. We're going to if we get a large number today, either one way or the other, I think the markets will sell off, and then I think the buyers and dips will come in, buy them up again, and then start to rally them going into the interest rate decision. But we're getting very, very close here to a market top. We need price. The bottom line is we need price to move and start making lower lows and lower highs. But like I mentioned in the two scenarios that are playing out, I do see that we make that fourth minor wave pullback, okay, making another higher low, and then up one more time, get the shorts to capitulate, get the longs to get in at the highs, which the longs are, dumb money, meaning retail, are buying up here at these highs. Money flows in ETFs have been the highest in 6 years. And we had outflows in mutual funds. So what that's telling you is that the retail are doing it themselves. Because it's so easy now, they think that we just buy the market, hold it, and the market at the end of the week you're making money. And wait till the downturn happens. That's going to be the big key. When it's going to happen, it's definitely going to happen. We don't know when, at what given moment the market's going to start to turn around again. So we shall see. But interesting developments. Bonds have continually getting hammered. We just now lost our weekly support that we were talking about, and I'll go over that with you. Gold continues to make new lows, and I'm going to show you some free levels from our Pro Trader Premier video on GDX and IWM, which I had a lot of emails. Again, if I can please show that levels, which I'm going to do today. So let's move on. Dollar is still holding in real nice. I mean, you could make a case that this is a bear flag here. There's no question about it. One of my viewers actually had mentioned, could this be a bear flag? Absolutely, not even a question. But a little bit longer than this flag itself, then it's just going to be an uptrend channel. But you can see the flagpole here. Here's the flag, so you can identify that if you think that is a bear flag. It could be, but again, only bearish if you break the lower end of this trend line. So right now, this is making higher highs and higher lows, putting pressure on gold and oil. I'm going to do an analysis on oil. I had mentioned a couple of weeks ago and into the video last week, I said be careful with oil because the commitment to trader reports have the producers extremely short at these levels, and we couldn't break 55. And I just don't have enough time to cover oil all the time on these videos in the morning. But what I'll do is I'll kind of revert. We'll do gold one couple days, and then we'll go back to oil, using crude oil again. So I'll start doing that on Monday because I see there's a lot of people that are interested in trading in crude oil. I've been getting emails on that as well, so I'll start doing that and I'll cover that. But one of my convictions were I said I would never buy crude here unless it breaks 55 and hold for a few days. Is the commitment to trade reports. The producers, the smart money in the report, were extremely short, and you just needed that catalyst. You had to wait for that catalyst, and Wednesday's inventory numbers was the catalyst. There's tons of oil out there, guys. Don't let anybody fool you. There's a tons of oil out there. You have mega oil tankers parked out in the Mediterranean. There's like 12 of them out there that just don't know where to put the oil. And now with new technology coming on, this online, you got the shale guys here in the United States. They're pumping. They're not going to stop pumping because OPEC says to stop pumping or reduce production costs. Everybody has to pay bills, and I'm telling you that's not going to happen. There's a lot of oil out there. I'm not going to comment on oil today, but I will do something over the weekend if I have some time. If not, I'll look for it on Monday's report. Okay. Next is going to be the TLT. We mentioned, hey guys, be careful. Here are some of your levels in the TLT. 120, 134, we talked about that being really heavy. This is our Pro Trader Premier video, $49, guys. It's crazy not to even do. This is, you can see, you can base on your trading where your resistance and your support areas are. These are actionable areas where price adheres to. And this is the area here that we were talking about for months, couple months. If it breaks, we'll start looking at short rallies. We'll test this. Now, here's the test. I added another line down here. So if we break this low, okay, one of two things can happen. Either we double bottom and then we start to move higher, okay, or we start to, let me just figure that here. Here's the double bottom, and then we move higher, right? Or we just literally now start to break down from this area here. We break down, and we get our first back test, which would be our small bear flag into resistance, and then start to move lower. That's what I'm looking for in the next few days, and then we'll get active in TLT again. You can start looking at short TLT because now price is telling us this is where it wants to go. GLD, here's our free levels for GLD right now. Small little 113.25, 119.70. Okay, we started to pull back again. Let's see if we can make a higher low from this previous low here. If we lose the 113.26 in GLD, then we start to move down, and we'll probably double bottom from here. All right, but we're getting close to a really good buying opportunity in GLD. Not yet. Here's our free levels in the GDX, and you can see here we talked about this all week, and I haven't shown this to you because it is a paid subscription, but we're just giving you a couple of free levels. This is where we already knew, our subscribers already knew that this was heavy resistance. So every time this market in GDX actually started popping, our subs were shorting this. So you can see now we're starting to get a little bit oversold here. This could be a good little spot. If it breaks 20, we should flush down to this area here. So I'm watching this closely. And the first thing that if you're looking to do anything, excuse me, I'm a little bit under the weather. If you're looking to do anything, you might want to look at the miners first before oil, before gold in itself, because they do move before the metal does. Spiders, let's talk about that. We had a big move last Wednesday on the Donald Trump speech, which I said was out of control, insane. We were about 2.9% away from the 21 EMA daily that you can see here. We have now sold off. You could see, and I mentioned to you on last Thursday, I said, guys, we took back all of the gains intraday from 9:30 to 4, not the gap. Look for the fill a gap, okay? What happened was we have very subdued trading this week, very subdued, and I mean no momentum to the downside, no momentum to the upside. We just kind of gapped down each day a little bit, and we just kind of drifted lower, stayed in the ranges, and every day we did that. So what does that tell you? Well, it's very difficult if you're indexing for the day trader, but it is bullish. It is still bullish. I hate to say it. I'd love to see a pullback in this market, but unfortunately this is still bullish because we have extremely light volume, and you could even say that this is a nice little bull flag pattern here, okay? We'll take that from the corner, and here's your flagpole. All right, so we caught that, and we have a doji. Now we have to look for an expansion of volume today. Today's going to be the ticket to confirm that this spider move is going to go higher. Okay, so we got to look for volume. Let's look for the volume spike, take out yesterday's high, and then we should at least challenge the highs here going into the rate decision of next week. 60-minute chart, just want to show you where we are here. We fill the gap here. We're at the upper end of this new other gap on a 60-minute. And let's see what happens. Let's see if we get back above this line here, or we challenge the 240 in the spiders. Free level in the IWM, since a lot of you guys are short still. And we talked about these levels hasn't changed since a couple weeks ago. So 134, 131 here, and then of course the bigger picture would be a test of this high here of 125, 126 area. Transports here, our leader leading the market down. So let's see if we get to this corner. But even though this is lower and the market and we are seeing some volume expansion, this is still bullish. Okay, we call it like it is at TMT. Whether we're unbiased, buy or sell. I would love to see a sell-off so we can look to start positioning again. But with no sell-off, to take on risk overnight is absolutely insane. We haven't had a sell-off. We haven't had a correction, guys, since 2009. Just brace yourself around that, and you can really see what you're talking about. Anyway, so this is bad. This is not good that we're rolling over, but we're still at the upper end of the range here, and we're still in this large horizontal trend line here. Channel. So let's see if this thing starts to break down a little bit. And last is your Qs. Q's doing really well here, holding in very, very well actually. The FANG stock's doing well. Amazon making new highs, but again, day trading is one thing. I would not hold these stocks. They're overextended. They're very, very expensive. PEs are out of control. And again, you can see on Amazon, nobody cares. But be a prudent investor. Make sure you do your homework. Make sure you do your own analysis. If you're listening to somebody, you're following somebody that you think is smart, that's great. But remember, it's your money that you're putting on the line. Just make sure that you're doing your own homework and that your analysis agrees with whoever you're looking at. Okay. Have a great weekend, everybody. We'll see you on Monday.